afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, this video is being filmed on Sunday for trading Sunday into Monday. That's February 7th, 2010, Sunday for trading Monday, February 8th. Traders, situation right off the bat in the U.S. indices and most world indices. Big swing day. We have a big swing day. Very important with this particular swing day, and I'm going to show you in just a couple of moments, traders. If we handle this swing day the way we normally handle any swing day that we see, the stop is going to be enormous because of the way the swing day set itself up on Friday. If you ask me, 20 some odd points is just too much for a stop, so we will not take the swing day on its own merit. What we will do is stand aside for just a few hours tonight into tomorrow morning maybe, see where the market tests some key Omni levels, then we'll go ahead and enter into a position. So in other words, with this swing day in the indices, you'd normally be a buyer of this waiting for a one-day run-up. I am a seller of rallies. We are well below the Optima or the Omni Trading Academy's proprietary moving average, OTAPMA as we like to call it. So the fact that I'm a seller of rallies, we're well below the average. We have a buy swing day. I prefer to sidestep that buy swing day. In fact, traders, I probably would have taken it anyway because a swing day is a swing day and you take one when you see one. But again, when you'll see the illustration in a moment, the stop would be so great on this swing day. I think it's prudent that us Omniacs sidestep it a little bit. Then see if the market holds somewhere and then talk about getting into a trade. Personally, we're not falling in love with the upside, so I prefer to sell a rally. If in fact the swing day produces a rally, I'd rather sell into that and ride another elevator ride down. But of course, with day traders, a stop is our best friend. We always use stops, and we will do that. We'll place a trade with a stop. Again, though, just to make sure that we reiterate on this, we are going to stand aside for a few hours in the S&P, allow that swing day to test itself, and if it holds, we'll play the game. The swing day is only expected to move us up a few bucks anyway. Again, I prefer to sell that rally, so let's see how the day shapes up. That's the indices. Traders, because the Super Bowl is on its way, I already got my jersey on. I want to get out of here. I want to go watch that Super Bowl game. But of course, I couldn't do this without showing you at least a chart and a reason why we will not take that swing day. Now, traders, on a normal swing day, let's say you have a market that's coming down, right? And then you have a swing day where it goes down pretty deep below the day's low, and then it rallies up and it comes back and it settles somewhere near the highs. This day would be considered your swing day. How do you handle swing days? Well, you're supposed to wait for the opening of this day, the very next day, as the market drops lower and gets about as low as the previous day's low. You're supposed to buy and expect a rally out. That's how you handle a swing day. The problem with tomorrow's swing day is it settled so close to the highs that the stop is all the way down here, traders. The stop would literally be over $20 in the ES to take a swing day like the one that set up on Friday. I don't like $20 stops. I think the risk-reward is out of whack on this trade. So we are not going to take the swing day. Again, if settlement was lower or if the day before was a lot lower, well, then you can get long here, put your stop down here, and have a safe risk-reward ratio, right? But that's not what's going on here, traders. What we have going on, of course, as I just showed you, is you have the swing day, but this day went down really far and came all the way back and settled by the highs. The problem we really have is the day before, Thursday. Thursday's low is really close to Friday's high. That would make the stop enormous, and I am not willing to take a trade with such a big stop. I do not think that is prudent. I think it's over risky, and being that we are now sellers of rallies, that puts us in a buy trade to begin with, and traders, I don't want to do that. So, with no further ado, I would like to show you one chart of the S&P. I'll show you that the way it looks live on the S&P chart, and you'll see for yourselves. Okay, traders? So, with no further ado, let's go look at the chart. Okay, traders, this is the Emini S&P daily bar chart, and as you can see, as we know, we failed miserably at the OTAPMA, or the Omni Trade Academy's proprietary moving average. Since then, we've broke down. What happened Friday is it put in a very interesting swing day. That's this bar right here, where it goes much lower than the day before, turns around, rallies, comes all the way back, and settles by the high. Swing day, normally you would buy that. First thing for us, we know we're sellers of rallies, so we're not looking for buy trades. But a swing day is a swing day, and you're supposed to take one when you see one. My reasoning why I'm not going to take this swing day the way it looks to you right now is this. You'd have to buy it right here, basically at Thursday's low. You'd have to put your stop all the way down here below Friday's low. That is a $20 stop. That is way too big, so I don't want to take that trade. The way you would handle the trade is you buy it right here. You put your stop below the swing day low and expect a rally out. Again, though, look at the distance between the stop and where you'd have to buy it. For me, I am not going to take that trade. I'm certainly not going to tell my Omniacs to take it. Again, because this stop area here is just too great. So we won't take the swing day on its own merit. We will see how it acts through Sunday night into Monday and decide what course of action is prudent. This swing day, by the way, should only produce about a 15 to 20 point rally, and if it does, we'd be selling into that anyway. So I'm going to look to sell the rallies instead, unless the swing day really does set itself up. So there's the reasoning, traders. Again, if the swing day was set up more like this, and you had to buy it right here, and the stop was kind of smaller, hey, that's worth taking, and then expect the upside. But the fact that this day has gone so far, the stop's got to be all the way down here, referring back to this day, and I just do not think that's a prudent risk-reward ratio. Traders, pull your own charts, do your own homework, take a look at the swing days for yourselves. I don't want to tell you not to take a swing day because we always take swing days. However, the risk-reward just is not there on this particular swing day. Okay, traders, make sure you pull your charts. I'll see you back at the site. So, traders, you see that chart? You see that swing day? If we actually bought the swing day where we're supposed to buy it, the stop would be so great, I am not willing to take on that risk. These markets are going to be here every day. There is no need for us to think, oh no, we have to be trading Sunday into Monday. What am I going to do if I don't trade? Hey, if you don't get the trade, you don't get the trade. There's Monday night, there's Tuesday, there's Wednesday, there's next week, there's the week after, there's the year after. These markets are here every single day. So if you don't have a technical setup with a decent risk-reward ratio, don't take the trade. Sidestep it and see what happens. My advice to you, in any event, what we'll do with tomorrow is we'll see if it comes down and it holds somewhere and it makes some sense into that swing day. Maybe we'll play it, maybe we won't. But prudent to step aside for now. At least that's my opinion. All right, traders, remember, we are well below the OTAPMA. We are selling rallies in the indices, no doubt, and we'll see what happens. All right, traders, say this to yourselves every morning, every afternoon, every evening, because it'll help you keep your emotions out of trading, and you know what that is. Subs are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss.